great to see you this afternoon. Thank you very much. My name's Charlotte Crosswell, and I'm Chair and Trustee of Open Banking, but I also have the privilege of sitting on the board of CPS as well. Thank you everyone for coming back after the coffee break. Just a quick reminder, do put your phones in silent mode if possible. We are going to try and find some time at the end for some questions. I think that's been happening at the earlier sessions. There'll be roving mics later as well. Right, so we get the optimistic session this afternoon. Why choose Britain? I've been told we have to stay on optimism and tell us all and cheer us all up ahead of a busy week of what's going to happen and why we still have to have faith in Britain and move it forward, something that CPS is obviously a great believer in. I have an amazing panel, obviously, as you can see this afternoon. We have Andrew Griffith, Economic Secretary and City Minister. I've worked with a number of occasions, so great to see you, Andrew. Chris Hayward, as you all know, Policy Chair of the City of London Corporation. Lord Johnson, Founding Partner and Chief Executive of Somerset Capital. And of course, Sir Vince Cable, now Visiting Professor at the LSE. So I am going to invite each of the panellists to just give us a couple of minutes on their take on why choose Britain before we move on to questions. So perhaps Chris, I will start with you.
Charlotte, thank you very much, and it was good to be able to welcome you all here at the very start of our conference this afternoon. And Charlotte, I'd want to start, I think, also by congratulating you on your recent appointment as Chairman of CFIT, the Centre for Finance, Innovation and Technology. FinTech, hopefully we'll end up talking about a bit as one of the reasons why people should choose Britain during the course of this afternoon. But look, I come at this obviously from a fairly London-centric position initially, in the sense that London is one of the truly global cities alongside New York, Singapore, and Hong Kong. And in spite of the recent turmoil in the markets and financially, I think we have our fundamental institutions, our infrastructure, our rule of law, our time zone, our language, our talent. These are all reasons why people would want to invest in Britain. And these are reasons which practically no other global city, I think, in fact, let's say no other global city can combine all of those abilities in the way that London can. And I touched at the start when I welcomed you earlier that in the financial and professional services sector in the United Kingdom, we're feeding 2.3 million jobs. And here in the City Corporation, we have a regional strategy which actually means that we support financial and professional services clusters all over the United Kingdom. Financial services shouldn't be seen, in my view, as a London-centric situation. It's one which has tentacles throughout the United Kingdom and has the ability to drive economic growth and jobs right throughout the kingdom. So I think, moving forward, we have the opportunity to increase inward investment into London and into the United Kingdom, I should say, as a whole. And part of this, for me, and this will be my closing remark, really, is about optimism. It's about talking up Britain. We're too fond of always finding what's wrong rather than the multiplicity of things that are right. And you touched at the start, Charlotte, on, this is the positive session, and it needs to be positive. United Kingdom has a great future, notwithstanding the challenges we've got, and they will, of course, take time to work through, and no doubt we'll talk about those this afternoon. But I think we've got a big future ahead of this country, and we should all get behind it, and we should all back it.
Yeah. Thank you, Chris.
Yeah, thank you. It's delightful to be here. So thank you for the City of London and the excellent CPS for bringing us all together. Can I also, on behalf of the government, thank each and every one of you. This government is on the side of wealth creators, of entrepreneurs, of investors, of participants in the capital markets that make this great country what it has always been. And I suspect deep in the history of the arches of this building is that same historical sense of being willing to take risk, to sail over the edge of the world and find new markets and find new products to sell. It's absolutely critical to what we do. Now, Chris and I have got the same script, so it'll be very easy. By the time we end up this panel, we'll have brainstormed a full pantheon of the rule of law and the language and all the rest of it. So let me just try and distill that down into a few points. To me, if you think about the successful factors in every enterprise, particularly private enterprise, but this would be true equally of social enterprise or even, perish the thought, government. At the end of the day, you're talking about the combination of capital, people, and ideas. And I think, why choose Britain? Because I don't think anywhere else on earth, and some of us are party pre in this respect, would you get the same combination of a respect for capital, for freedom of contract, all of the things that the common law bring us. The deep liquidity that London has offered ever since the first galleys sailed up to the Pool of London. The flexible labour markets that, despite the endeavours of all sorts of political governments of all sorts of shades, still having done business in other markets, there's a respectable honesty about the flexibility of the UK labour market. It's easier to attract, to retain, and to hire and generate productivity from labour in the UK. And a great skills base that perhaps I'll leave for others to talk about in terms of our great universities, the prodigious amount that the government is spending and increasing on the science budget, combined with that ability to take risk. And then one thing we should not overlook, because there are many pretenders to the UK's crown amongst the world, but they don't always share our value system. And from our value system flows that Darwinian testing of ideas, that ability to think freely and to alight upon the best ideas for the moment in time. And sad to say, as we see in too many parts of the world, that freedom of thought, that freedom of expression, protected by the rule of law, is not something that people can take advantage of. And of course, that is an inhibiting factor when it comes to where you would locate and the prodigious latent ability of the economy to create and embrace new ideas and to grow. So, great love of capital as something we celebrate, the right skills, the right flexibility in our labour markets, but also that values-based openness to ideas. I'll leave it there, Charlotte.
Great. Thank you, Andrew. Dominic.
Well, thank you very much indeed. Am I allowed not to be optimistic just to start with? Because actually I think this country's in serious trouble. I think we're entering some cataclysmic headwinds. And I was always told as an investor, and Michael Spencer will understand this, you should watch the tides, not the eddies. And the change in the interest rate environment, plus the political instability that we've faced over the last couple of years, is a serious challenge to this country. The good news is that investment can change all that, because foreign investment in this country actually makes companies more productive. They're also more likely to export, the two things that we desperately need. And if we change our domestic investment processes, we can unleash billions of pounds in order to change the infrastructure and human skills investment that we need in this country. But we have a lot of work to do, and my concern is that we've allowed ourselves to fall back on these very important things, which are culture, rule of law, and language, and so on and so forth, without really trying as hard as other countries are now trying. So we live in a competitive dog-eat-dog world. 5 years ago, 10 years ago, it was very easy to say, okay, come to Britain, it's a fabulous place. We have a stable tax regime, we have a stable economy, we have low interest rates, and we have a stable political system. And I think it's just much harder to say that to investors now. So we have to work extra hard. And one of the wonderful things about the CPS is it continues to put pressure on the government to think great thoughts in order to become more innovative and to stretch ourselves in order to attract investment. And I think we need to do a number of things. Firstly, we need to try and get Whitehall to look at every activity through the lens of the investor. So rather than just taking each law in its own case, to say, okay, what are we actually doing and how is this going to affect investment? If it's going to block it, if it's going to create extra friction, then we should work for a way to ameliorate it. So I'd ask the CPS and our minister to put pressure on there. The second point, which we're very bad at, and this might be anti-Thatcherite, but we should look to champion sectors. And no country that's had a successful sector creation, such as Taiwan and semiconductors, has done that by accident. It's not entirely left up to the market. And I think the government needs to be highly proactive in developing an investment strategy to promote sectors so that we can become world leaders and be successful in those areas. Otherwise, we will be left behind. And the last point I'd say, which I think is important and actually very exciting, which is that the world has changed. And I think we're still too often caught in a sort of 19th, 20th century view of how people live and how they accumulate assets. So when we were, well, our lives, my age 48, although I look a lot younger, you're born You go to school, you finish school, you buy a car, you get a job, you marry, you buy a house, you have children, you retire, and then you die. And so you're accumulating knowledge at the beginning, and then you accumulate assets, and then you run them down. My daughter, who's 14, she's not going to finish school. She'll probably be educated continually throughout her life. She doesn't buy a car, she'll share a car. She's not going to have a career like we might have had. She'll have many different careers. She won't marry. She can't afford to buy a house. She won't have children until much later. She can't afford to retire, and she may not even die. So the whole principle, of our sort of liberal democratic system are really based on the wrong tenets. But how exciting is it for us in this room to think of new ways to answer these challenges, to create new solutions for how people are actually going to live for the next 100 years? And that will require investment, and that means people have to choose Britain.
Thank you, Dominic. I'm fascinated whether you've managed to tell your 14-year-old that and whether she's actually believed you as compared to my 14-year-old.
She's keen to leave school, that's for sure, but that's about it.
Vince.
Well, thank you for the invite. I guess I'm here because I was Secretary of State for 5 years, as opposed to the 5-month average or the recent 5-week average for my successors. But I think the coalition was actually a template for what it is we should be trying to do. I mean, we stabilized the public finances, and we created an attractive environment for inward foreign investment. What's happened since is less happy, I'm afraid. My memo to the Chancellor for Thursday is a couple of no-nos. No more magic money trees, whether they're of the Truss or the Corbyn variety, or the people who say we can finance the whole of government through ever-increasing windfall taxes on wicked oil companies. It isn't going to work. And secondly, avoid expensive gimmicks. We've had years of enterprise zones, investment zones, free ports, all of which, at great public expense, are shifting investment from one side of a road to another. And we don't need that. And 3 positives, if I can, quickly. First, the importance of prioritizing public investment over public current spending, something we failed to do, sadly, in our coalition. And one way of doing this is to have a supplementary debt rule, public finance, not just reducing net debt, though that's important, but having increasing net asset value for the public sector. Secondly, we've got to decentralize. We're not going to get the energy of decision-making unless we get elected mayors and councils with more genuine financial freedom. And to do that, we have to reform council tax. Somebody has to bite the bullet of revaluation and reforming the multiplier so that it's at the very least proportional. And my third suggested point is about planning reform. We always talk about it. Nothing ever happens. The reason I think at last has been alighted on by Michael Gove, who is proposing, rightly, we have to deal with the Land Compensation Act, 1961. Under the current system, local communities get no value from planning uplift and hope value, nor do builders. And so we have to change a system that relies almost exclusively on increasing values for landowners. The important reform, but until we do that, getting rid of excessive planning regulation isn't going to produce the outcomes we want. Thank you.
Thank you very much. Let's talk about mood at the moment, and perhaps, Dominic, I can start with you. Talking about mood from investors. You touched upon it in your opening remarks. Recent events, has that changed the mood from investors, and where do you think we are at the moment?
Well, yes, thank you, Charlotte. And I'm sorry, Vince, I've undercut your average. I did 24 days as a minister for investment, so I'm rather sorry about that. But in that brief period of office, I did go to India, and there I saw a number of businesses who intriguingly want to manufacture in India but want to export our human capital. And they are obsessed with the opportunities that we present. They see us, particularly if we can more effectively craft a post-Brexit vision of Britain, as the fulcrum point in the world. The issue they had was that we started to lack predictability and stability. And the one thing that investors want above all things in the world is predictability and stability. And so as you rightly say, the most important thing that we can do is to try and reassure investors with the budget, and that includes not having surprises in the budget or changing complicated tax and regulatory regimes, to give them a sense of a 5 to 10 year planning opportunity in this country. So they're still very positive, but as you can imagine, everything's on hold. And that's disastrous because a delayed investment is a non-investment. So we need to do everything we can to reassure people that they can plan long-term and put money into this country.
Chris, are you hearing the same from your role?
Yeah, so, I mean, clearly there are nervousness in the market, and we've been through market instability, we've been through energy price increases, we've been through cost of living. But these are not incidentally unique, of course, to the United Kingdom. You know, I was in the US a couple of weeks ago, when you're in the US, they're facing higher interest rates, they're facing inflation, all the challenges that we are facing in the United Kingdom. So what I hope that the government will do, and I hope we will see this in the announcement, or the autumn announcement on Thursday, is more measures to boost growth and boost investment. Because frankly, I think that's the only way out. And actually, there's no difference between that umbrella of growth and investment between a Truss government and a Sunak government. There may be different ways and timings and positionings of how you do it. But we all know that with precious little growth in this economy over the past 15 years, if we don't address that, and if we don't get investment into the United Kingdom, then we cannot find our way out. This is the only way out. So my hope is that the government will move in that direction, and we'll see it on Thursday, and that will steady and stabilize the markets, and we will be able to drive forward from that position.
Thank you. Now, Andrew, I'm not going to put you on the spot, obviously, on the autumn statement, but I know that you and I have incredible interest in fintech, where we are seeing increasing investment still coming into the UK. How do we replicate that, maybe perhaps across other sectors as well? And do you share the views of your fellow panelists?
Yes, look, I think that's exactly right. I mean, people understand. I mean, you should never underestimate the innate common sense of the British people, and people understand that we've been through unprecedented periods. I think something like £6,000 for every household was the overall cost of COVID, and then we have war on European soil. Somewhere you'd take a sort of charter flight to a few years ago is now an active war zone, and because of the nature of energy economics, and everything ultimately has a huge embedded energy cost in it, we're seeing the supply side pressures that we are. So, I think people understand that governments, and this government in particular, have to take cautious choices, and that those won't always be the easy choices, that you've got to be responsible and put in place that basic building block of stability, but also, as others have said, that is just table stakes. That's what you need to build the architecture of a modern economy on. And there, I'm very positive. As you know, 7 out of 10 of every pound invested in fintech, and that's a huge growing sector, and it's just one that we could talk about, continues to flow into the UK because of some of the advantages that we talked about. I agree with Dominic, they have to be earned, right? You can't just sit back on your laurels and say, because we've got some heritage in some of these areas, and that's my day job, Charlotte. So as you know, because we're starting to work closely together already, how can I deliver for the Chancellor and the Prime Minister what the mandate they set me is to have competitive financial services, because it is just such a big part of the economy, and all of the new energy infrastructure, this huge clean tech revolution that's going to see every part of how we plumb our basic energy systems, how we build our economy, how we get into sectors like green, clean living, automotive, all of those are going to have a sustainable investing component, and therefore it's imperative that London and the United Kingdom, but we'll say London just right here, but we mean the whole of the United Kingdom, have a leadership position in that. And it won't happen just because, you can't just will the ends, you've got to will the means. And that is often quite painstaking, detailed regulation. There is something that you can all take away with great excitement, which is the Financial Services and Markets Bill. That's a long term, but what it is it empowers the government, having repatriated powers from the European Union. It gives us the ability to control our own rule book, working with the regulators hand in hand. But for the first time, we can do that. For the first time in 42 years, you can actually wake up in the morning and say, Charlotte, what are we going to do to try and unlock the fintech opportunity, and then go back in the afternoon and look at the rule book and reopen it in the belief that we can actually change it, which we could not have done before.
Great. So Vince, maybe I'll turn to you, and perhaps we can talk about autumn statement. And what would you like to see in fiscal policy that allows us to unleash this investment destination?
Well, I would start by not reinventing the wheel. I mean, actually, I'm glad that Lord Johnson mentioned this point, and the Economic Secretary, that we had a perfectly sensible framework for sectoral policy, not just manufacturing, but services, professional services too. Government and private sector having a sensible dialogue around innovation, training, these long-term confidence issues. And yet every government comes in, feels it has to sort of reinvent the whole industry process all over again. And so just let's have a period of stability, 10 years, where this kind of sectoral approach, call it industry policy, whatever, is given time to work.
Coming back to you, Dominic, perhaps on policy and sort of looking ahead to the next few months, how do you think we do stimulate this continued investment into UK, particularly in tech and innovation, but all the other parts of our audience is looking at?
To follow on from that point, I think there are two things that you can do. We haven't got any room to spend any money. Ultimately, we're quite constrained. So we have to sacrifice that. Sadly, for those of us who believed in trustonomics, we have to sacrifice that and look for other alternatives. So we have to be incredibly bold when it comes to deregulation. And as Vince said, planning is a huge issue. So I encountered a lot of businesses in my short tenure who wanted to build quite exciting opportunities in the UK, but couldn't because of a local council objection or whatever it may be. Energy is a huge issue. Now, I'm not talking about renewable energy, I'm talking about access to energy. I was astonished to discover how many companies were on waiting lists of up to 5 years to get connected to the grid. Now, can you imagine what other European countries are offering these companies when they come to them? They're offering them, a plug socket, for one thing. They're offering them the ability to build their factory. This doesn't sound very advanced, but it's absolutely essential, and we're lagging behind aggressively on this. So deregulation is essential, and we still have to be bold and brave on it. And the second point is access to capital. Why are all our businesses listing in the US rather than in the UK? There's no mechanical difference between the LSE and NASDAQ. It's simply because that's where the capital is, and we haven't developed our domestic capital markets at all. In fact, we do everything we can to hinder the ability for pension funds and so on to invest in greenfield venture-type sites. In the stroke of a pen, in a budget statement next week, or when Thursday, whenever it is, we could change that. And not squander money on white elephants, but actually allow there to be an effective capital market for growth in this country. These are easy things to do on paper, but we're not doing them.
And we've talked about listings for a long time, and how do we attract that? How do we get growth capital, crossover capital, patient capital? What would you like to see? What is that magic line you'd like to see put into that statement?
Well, I might put that back to Andrew, actually, because he's more of an expert in how you can restructure the domestic pension funds, but really allowing pension funds to invest in growth opportunities for starters, which they can't do. They can't invest in greenfield and so on. It's very complicated. And ultimately being a lot more aggressive when it comes to trying to encourage companies to list in the UK. And there are ways in which you can change listing regulations to make it more, more attractive for startup businesses and so on, particularly those who want to keep more of their shares and so on. I mean, these are, you can list some quite straightforward things that aren't actually that complicated. But I just sense that we're entering a period of a bit of malaise. We think we haven't got any money, so we can't do anything. And everyone always just wants money. Well, actually, the money is there. It just has to be released and directed in the right direction.
I mean, Andrew, coming to that, I'm sure you've spent time with Jonathan Hill since his review and the Austin review as well. Would you like to comment on sort of listings and how we can accelerate that?
Yeah, look, we've got to deliver. I mean, the truth is there's been lots of reports written, there's lots of slides of PowerPoint. What we've got to do at this particular moment in time, and the legislative framework is non-trivial, right? So you have to put that in place. We don't live in a, fiat command economy where you can just wish things. But that legislation will be on the books before Easter, before the Easter bunny hops along. And then we will be able to take work that was done on making the London markets more attractive on listings to be able to take that forward. we'll be able to do that. The Skiot review on ring fencing capital, the Khalifa review on fintech. So lots of these measures, I would say, you know, we know, I mean, it's tangible in front of us what we need to do. On Solvency II, the great unlock of all of our pensions, deploying that capital to lift up the economy in new and renewable energy, you know, that is on our to-do list. That is something that we will proceed with at pace. And if I can make one more thing, because this is a CPS conference, and you're not just looking at the here and now, but you're opening up new areas of policy that we need to address in the longer term. A lot of this comes down to the attitude towards risk, the culture of celebrating entrepreneurship, being comfortable with the idea of wealth creators and embracing wealth creators and making sure that the United Kingdom is a brilliant home to found and grow and to scale a business really successfully. So, you know, you can look to your sort of transient ministerial team to move the peanut forward on legislation, and we will. And then we will turn these golden keys of unlocking some of these big opportunities, so productive capital flows. But we also, a broader issue in society, and those who come to the Centre for Policy Studies, HSBC City of London Telegraph Conference, also have to play up here. We have to make the positive case, because if we see a generation of people who don't feel connected with capital markets, who don't have a stake in their own home, who don't have a stake in society, who think financial products are things that are for other people rather than themselves, or people in large parts of the United Kingdom who think it's all about a few folk in the City of London rather than on every high street and in every terrace in the United Kingdom, then we won't build that philosophical, moral, political complexion that will give us the license to operate in the sort of society that we want to see. So well done, CPS. Keep going.
Chris, I think a lot of people have been talking about tax and business tax, you know, and obviously I'm sure you hear a huge amount about that, you know, not just from the whole of the UK, but also actually the City of London Corporation itself and how you operate that. You know, what do you think we need to do to change our business tax structures and then, you know, effectively take that to appealing more internationally?
Well, I think we need a tax structure for business which is competitive. And I mean, this is a word we use a lot, but competitiveness really does, in a post-Brexit environment, have to be at the centre of everything we consider, and tax is one of those. And it'll be very interesting to see what will happen on Thursday in that respect. So, look, just let me touch on banks for a moment, because they're always at the centre of this, and the levy on banks is an interesting one, particularly as Europe is running off its equivalent, etc. So how do we keep, because banks create jobs as well, you know, it's important to remember that. But what we need, I think, are tax plans which stimulate that growth, which stimulate prosperity and risk-taking and entrepreneurship, all the things the Minister was outlining. So what we need is a tax regime which will help our businesses to be competitive.
Yeah. Vince?
Yes, of course, if you're talking about international capital flows, you know, there is no sense in being significantly above the OECD average. But I just wanted to throw a bit of a stone in the pool, which may not agree with most of the people in the audience here, but if we're talking about non-business taxation, personal and spending tax and so on, I mean, we're not a high-tax country, and we really have to get away from this idea, which has been around under government, Labour, coalition, Tory governments, that we can continue to enjoy European standards of welfare and public service with American levels of tax. It just won't work. And Jeremy Hunt has got the enviable job of pulling the plug on the fantasies that have gone with that. And we are just going to have to live with, you know, areas of taxation which can be increased without affecting international competitiveness. In other words, taxes on property, expenditure, to some extent income, and there will have to be a once and for all significant increase. And we just got to be grown up about it.
Thank you. Looking at sort of government policies and how we can obviously battle inflation and cost of living, which obviously is tied to, you know, trying to making us an international destination for investment. You know, Chris, what would you like to see to sit there and see how we can do that? Is it about opening up the data? Is there bills in there that we can look at? You know, how do we really make that change in government policy to help people through what's going to be quite a tough 12 to 18 months.
So yeah, it is going to be very tough, and nobody is going to deny that. I want to just focus on just quickly three things, if I may, around what can government do? What can they do? They can create an environment, first of all, of talent. Talent is an incredibly important resource in this country, and we've been proud to have it for many, many years. But we've got to make sure we hold it. We've got to make sure that the best people in the world want to work in the United Kingdom. So things that stimulate having the best talent pool and retaining the best talent pool, I think, are of fundamental importance. Second thing is around innovation. This country is remarkably innovative. And if I just take two areas, and one is fintech, the Minister's mentioned it, you've mentioned it, and you look at what our fintech market is doing, but you look at the further opportunity for exploiting that even further, it's a remarkable, remarkable thing that we should be really hanging on to. So incidentally is sustainable finance. Sustainable finance is the future, frankly. It's not going to go away. I've just come back from last week being in Egypt talking about sustainability and sustainable finance. And this is something which we've really got to see as an opportunity. But the third one, which I would just touch on inevitably, is regulation. Because in the financial services sector, our regulatory system is probably regarded as one of the best overall in the world. I mean, there are challenges, both of the PRA and the FCA, and particularly maybe the latter in timings and in ensuring that they speed up a bit. But the Financial Services and Markets Bill that the Minister made reference to is probably the most important piece of financial services legislation for the past 20 years, because, as he said, it sets us free from what we've had when we were in the EU. And we feel in the City of London, and I know this is not necessarily shared by everyone, that the secondary clause for the regulators of competitiveness and promoting competitiveness is actually fundamentally important, because for me, good growth and high quality regulation are two sides of the same coin. And that's what attracts investment. It doesn't detract investment into Britain, it actually attracts it.
Great.
I mean, that's so well put. And thank goodness we've got Andrew Griffith as in the Treasury, actually making sure that the values of the CPS are properly upheld. And I've been pushing for a competitiveness mandate for the FCA and the other regulators for years. Every other major regulator around the world, like the MAS in Singapore, has this. But I would just jump back a bit. I think we should be a low-tax economy. I think it's the right moral approach of a government to try to ensure that they run the services as effectively and efficiently as possible. And if we allow ourselves to think that it's okay to pay lots of tax as a good thing, you won't get better services. You'll just get more waste, effectively. And so I think that's and your liberty is impinged upon. So you can't then invest in the things that you want to realise yourself. And my concern, and I have great respect for Jeremy Hunt, and I think what they're going to do in the budget later this week will be absolutely right, because nothing matters more than bringing stability to the economy and trying to lower our cost of capital. That's just it. That's 99% of everything. But we mustn't be tricked into thinking that it's sort of a good idea to take people's wealth. And I worry that as we raise our tax rates on income and people's dividends and their small businesses, that it's just going to become impossible to earn wealth. And that might sound a bit sort of overly capitalistic. You can still make a lot of money if you build a business and you sell it for a fortune. But if you want to work hard in a traditional sense, the tax burden around you, both on what you earn and then how you're taxed and how you spend it, will just make it impossible for our citizens to earn wealth. And I don't think that's healthy. And I would also say, go back to the topic, why choose Britain? Let's be very careful not to scare away very rich people who want to come to London and spend their money and run their family offices and go to Harrods and buy Ferraris and have dinner at the Dorchester, because we're doing everything we can to make life for non-doms difficult. We're really trying quite hard to sort of send political messages, and have done for the last 10 years. It's accretive, it's slow, and it means that people on the margin stop making the decision to make this place their home, which is extremely disadvantageous to us.
Do we think that's fair criticism, Andrew? How will you use your role?
I was going to say I would agree with nearly everything all of the panel said, other than the bit about being lucky to have me. But no, look, I think there's strands of everything there. We've got to find the right balance. It's the reason we have governments, elected politicians when they're not in jungles, is because we need a resolving mechanism for all the really hard stuff in society. If it wasn't hard, then business would have sorted it, or charity sector would have sorted it. This is one of those moments of, quotes, hard. The Prime Minister, when he came in, was very clear that he was going to level with people, he was going to tell the truth, he was going to have that level of integrity and restore confidence to the market. So, as I said before, we need to do that, and that is, in my view, table stakes for where you build an economy from here. But then you do need that plan, and you'll be hearing more from the government, in all of the domains that have been covered by this conference and others, about how we do go on and build, a fair, but also an economy that's going to grow and unlock the prodigious capacity of the British people. I mean, that's, why choose Britain? Because we're just a wonderful country. We're a great place to live, where you can enjoy enormous freedoms. You can make the best, you can be the best version of yourselves. I often say, people say, do you want to be Singapore or Paris or Frankfurt or New York? No, we want to be the best version of ourselves. The best version of ourselves is a wonderful thing to be. And when, we've just got sometimes a little bit risk off, or we've just not quite lifted our eyes to the horizon to see how wonderful this country can be and our enterprises can be, we've just got to lift our eyes a little bit. And I think that once we get through this week or this winter, depending on how you frame it, we've got to get back to talking about how we unlock all these opportunities, in area by area. That's what government should be focused on, and a lot of that now, because of where we are, because of the time that, frankly, the fuse that the government's burnt down over the last, 2.5 years due to COVID, due to the macro environment, it puts the remaining time of this Parliament at an even increased premium. So I and my colleagues, you should be challenging with us, and I and my colleagues need to work at an unprecedented rate to actually deliver all of the good ideas that have been well oxygenated here, but also in different forums over many months.
Let's turn to regulation. And looking at the regulatory burden on businesses, we talked about, obviously, FSMB. And I think one of the key asks from industry is a better dialogue between the regulated and the regulators. Now we've left the EU.
I've literally never heard anyone say they want a better dialogue, they want better outcomes, Charlotte, and they should get them. So, we should have, brilliant, well-resourced, but accountable regulators, where there is a proper place and a respected place for the voice of enterprise, for risk takers, and that the regulators hold themselves to account, as well as the statutory process hold them to account, to make sure we get that thing that we all want, which is proportionate, timely, but relevant and respected regulation. Sorry, forgive me, I didn't mean to cut you across, but I don't think it's the dialogue that people want, it's being listened to.
I suppose that's what I was trying to get to. But yes, I agree. How do we lighten that? How do we, Chris, how do we lighten the regulatory burden? I'm sure you hear about this.
Well, yes, you do. I think regulation needs to focus around our most exportable commodities globally as well. And I'm thinking of services again. So financial services, we talk about things like fintech, we talk about sustainable finance, regulation around those areas that promotes these commodities, because, we are the biggest exporter of financial services in the world, and we shouldn't forget that. So, regulators can have a role of helping us to do that. And I think you just mentioned, or you mentioned in your question, a little bit about the EU as well, and where should we be with that? Now, look, for me, the divorce is over, right? We need to move on. And I appreciate there are outstanding issues like the Anglo-Irish Agreement, which need to be resolved. But a strong UK, a strong financially secure UK, trading with a strong EU is actually good for both. And I think we've really got to get over this, history that we've had, which is actually damaging to both parties. We need to pick up and actually start to drive forward the agenda with Europe again.
And I totally agree, because if I think of the fintech sector, all we hear is we want to go to Europe first, then we want to go to the rest of the world. At the moment, they're not quite sure if they do want to go to Europe or not. Exactly. And then we obviously hear EU hubs coming over here and wanting to increase those relationships. So definitely, maybe now's the time. I mean, Dominic, talking about regulatory burden, and what do you think we need to do to lighten it?
Well, I quite like the idea of exporting our regulatory superiority, because I actually do think we've got some fabulous regulators. And one of the feedbacks from business, including mine, is I don't want change. In a way, it sounds a bit glib, but I'd rather have a not very good regulation that I could manage for the next 10 years than something that changed the entire time. But one of the things we could think more aggressively on is our trade agenda. And I'm always surprised that we don't think geostrategically enough about how we link the world together with our special sectors or whatever it may be, and how we look at countries in very siloed ways. So if you take the Middle East, you look at the Middle East, you say, okay, we want their oil, we want to sell defense to them, we want to get investment from them. But actually what you're much better off doing is trying to create a much more sort of elaborate web around them to bind them in so that they really see us as their friend and we go back to being the fulcrum. So I would push, rather than for regulation, I would push for stronger trade deals, such as the digital deal we did with Japan, sorry, with Singapore, and the enhanced trade deal we did with Japan, which would enable us then to leverage off our human capital, which has no boundaries. So rather than just focusing on, I don't know, steel exports, which I think is important, but clearly isn't the growth sector for this economy, we should be looking at ways in which we can capitalize on data flows, human capital, professional qualification recognition, and both business mobility. And that requires, I think, quite forward thinking. But if we did that, then the only place to be in the world, frankly, would be the UK.
On this whole regulation issue, I go back to my basic point about not reinventing the wheel. I mean, we had 5 years of red tape challenges and 1 in, 2 out and all these other ideas, and some very clever people, Oliver Letwin, Francis Maud, and others who were crawling through every aspect of British regulation in order to get rid of redundancies. And apart from getting into dangerous areas like getting rid of fire regulation, we didn't leave anything on the table, apart from planning, which has, of course, its own separate set of logic, which really, where there's much scope for doing more. If we're talking about the financial sector, let's not forget that almost 15 years ago, the system crashed. As a result of that, the government I was in had to bring in, working through the Bank of England, tighter capital adequacy ratios, and so on. George Osborne and I worked on the ring fencing within banks that was unpopular in the city, but had to be done. And as a result, the banking system, maybe not the shadow banking system, but the banking system is now very stable and not going to crash in the way that it did before. And I think when I hear people saying, let's get rid of all the regulation around financial institutions, I mean, there may be some stupid things that can be ditched. The bonus regulation was a good example, but in terms of the mainstream financial regulation, it has helped create a stable financial banking system that isn't going to collapse and leave a big hole in the economy. We should be very careful about rushing down that road again of thoughtless deregulation.
Thank you. One more question maybe, and then we'll turn to the audience if anyone has questions for the panel. Let's look at the sectors where Britain has a natural advantage. Obviously, we're mostly in the heart of financial services here, so I'd love to talk about that. What do we need to do to support those more? Perhaps that's talent. We talked about regulation, export. What more would you like to see?
I think the first thing is to communicate. All of us, I think, have said exactly the same thing, actually. And I always observed in different positions in government that probably everybody would iterate their way to the sort of top 6, major opportunity sectors, the life sciences, AI, machine learning, fintech, climate tech, and then, you get a couple of different people have very respectable different views. But I think there's an enormous power from actually being willing to communicate that as well and say, you are important, we're on your side, tell us how we can help. It's not a thing. I mean, when I speak to financial services audiences, I want them to know that government is on their side. I want them to know that, a key tentpole of our economy, 10% of GDP and hopefully rising, is the financial services and professional services sector. And that almost reverses the presumption of that conversation. So I think the first thing is communicate. The second thing is there is always an opportunity for government to work more horizontally. I mean, the machinery of government, I don't think this is a dull topic. I think it's actually a really important topic, is still in too many areas, like the old 1970s corporation, sort of a bit command and control, a bit verticalized. All of the really big opportunities happen horizontally. You know, if you think about the life sciences, something a bit far removed from me to be talking about it, to be honest, from my portfolio. If you think about the life sciences, you want to take, you know, the data in our nationalised healthcare system, and you want to combine that with capital, both productive capital from the state, from the private sector, mostly from the private sector, and then all of the incubators that sit, you know, typically in the Department for Business. So you've got 3 or 4, even before you start looking at Treasury and legal reform, you've got 3 or 4 departments. So I'll stop there, but I think there's 2 things. One is you've got to be clear and focused about, you know, which are the sectors that you're going to, you know, make a choice. You know, to govern is to choose. You can't have a strategy that doesn't embed choices within it. And the really hard bit is you've got to say what you're not going to do. Right? If I'm going to help these things with a limited amount of resource, even if that resource is merely time, then I'm going to have to accept that there's some things I'm not going to be able to do. And an honest government, you know, will surface those choices and try and build consensus around those. And then secondly, try and, you know, really join government up. Government, when you can join it up, as we saw during the pandemic, can be super powerful, right? It can get things done. It is possible to have a modern, progressive, activist state that delivers good results and good outcomes, but it's quite exceptional, and you need to try and make that exception process a little bit more common if you really want to unlock these opportunities.
Vince, five years in government, as you said, you know, do you think we can do that again?
Well, I'll just make one point. I think one of the things that the coalition government overlooked, and which the Boris Johnson government got right, was the importance of the economics of place and the left-behind areas of Britain. And when we're talking about sectoral policies and so on, I think we mustn't lose that. It's got lost in all the fog and the confusion of the last few months, but that really does need to be reinstated as a sort of fundamental principle lying behind government-private sector relationships.
Yeah, agreed. Well, audience questions. Hopefully we've got a mic over there. We'll go here because you're next to the mic, and then we'll come over here, please. Thanks.
Hi. One of the things that hasn't
do you mind just saying who you are? Sorry.
Yeah, my name is Gary Ling. One of the things that hasn't been mentioned is that all of the main political parties seems to be accepting the consensus that Sir Vince outlined on the stage, which is that, you know, we want this great European state, welfare state spending and tax and so on. Well, of course, the last election didn't reflect that. And of course, the trust budget touched on areas such as IR35, small business, freeing small business. I know that's not the topic necessarily today, but these are the backbones of what makes Britain an entrepreneurial society. And so until we actually break from this mindset that collectively seems to be consuming the panel, with the possible exception of Lord Johnson, then I think that there isn't much hope for Britain, because we're just going to be in further decline.
I think that was a question, Andrew, but I'm going to pass that to you to respond to.
Look, I think it was a statement more than a question, and I will set out my credentials. I mean, I said, I'm pretty sure I said, but I can never say it too often, that government needs to be on the side of people who take risks. Starting and running a business is an enormous amount of risk, if only the piles of paperwork may one day topple down and crush you under all of the regulations you face. So there is always more to do, and you know, we need to get to a point of stability and build from there, Gary. But there's nothing, I hope there's nothing I've said that fundamentally leaves you either feeling undervalued, underappreciated, or that this government does not have that philosophy. And those who know me, I don't think I'm some soggy, Rob, come on, help me out, Robert, some soggy European consensus. You know, I was 27 years in business. I've been about 27 months in Parliament and government, and, you know, well, one was more enjoyable and potentially more productive, but we'll see.
No, I think, Gary, you're absolutely right. It's a terror that we're going to fall into this consensus that somehow it's okay to have very high levels of taxation in very large states. That's not how I want to live my life. It's not to say that we don't need to have the right level of taxation, and it's not to say that the budget coming up has to put predictability and stability of the system ahead of everything else, because if you've got too high a cost of capital, you can be as free as you like, but you'll be bankrupt. So but the important thing is we mustn't forget, and I'd like to hear more voices here, and I'd like to hear more voices like Andrew in the government who actually purport to represent the values that we know actually make people richer and give us longer, happier lives.
There's a gentleman over there, yes.
Hi, Charlotte. Nice, congrats on CFIT, yeah. I've been speaking to many people. My name's Dan Feeney, and I've been in fintech a long time. And can I change the question from why to when? When will the UK grab the nettle on digital identity? The trust framework is a beginning. It seems to be bounced around between BEIS and DCMS and Cabinet Office and Home Office, and the technology has moved a lot forward since the days of Tony Blair. So please, when?
Thanks, Dan. Sorry, the lights have prevented me from seeing the question. No, I didn't plant the question. Andrew, digital ID, in or out?
Too early, in fairness. Come and talk to me. The issue, clearly, technology moves at a prodigious pace. There are always safeguards and protections that can be built in, so we should have a chat about how best to do that.
One thing I've started calling it a financial passport. I feel it sounds more palatable maybe than digital ID.
Yeah, and the ultimate thing is the use case. I mean, people are very happy to pass vast amounts of their data around in some domains and not others. It's a proper conversation, but
yeah. In due course. Lady at the front here.
Thank you. Hi, everybody. Michelle Chivunga from Global Policy House. We're a blockchain company. I'm just wondering from the panel what your thoughts are around, your trade question. You talked a lot around really expanding around trade. Now, we're doing quite a lot of work in Africa, for example, where we're looking at things like cryptocurrency. I'm sure everybody's heard about what's going on in the crypto space. So one of the things that I am advocating for, and I've been advocating for some time, is actually regulation and bringing in regulation to help our businesses to be able to be looked at as credible businesses around the world. So what are your thoughts around really pushing ahead? I know the UK has been looking at crypto assets, for example, right? Can we actually expedite and move faster when it comes to regulation, number one? And then do we have enough appetite to actually be brave enough to do business in other parts of the world, especially in Africa, given the growth prospects in Africa? Thank you.
Take crypto.
look, we've got to absolutely, distributed ledger technology isn't going to be uninvented. We've got to embrace that. So it's the process of creative Darwinism that new industries form, people innovate, they take risk. Some of those risks pay off, some don't. But we're at the very nascent stage in that. And if you look at the arc of growth of how industries grow, they often do start, in a very unregulated domain. There gets to be a point where that lack of regulation holds businesses back. It doesn't give consumers typically the knowledge to be able to transact safely. And then it's right that regulators step in, not to stifle, not to have a conversation about risk that somehow confuses and says you can remove the risk, but so that people can understand that risk, it can be properly surfaced, and then consumers can make smart decisions for themselves. So that's philosophically where I am. I think the government has, when I've looked at what we've done in the past, has lent in a bit, and there's further that we can go on in that space, and that's a file I'm working at the moment.
Thank you. Dominic, you talked about trade and Africa. I know that obviously trade is something after your own heart.
It's absolutely fabulous, and I think the free trade area in Africa is going to be dependent upon blockchain. One of the things, I know we're jumping around a bit, but if you take Europe, what frustrates me is that we could do a lot more to support the small traders exporting to Europe through using technology, single trade windows, collecting tax at source, and using things like blockchain. And we're going to liberate ourselves. Talk about the exciting future. One of the things I forgot to mention in the old life cycle is you probably spent lots of your years, or will have spent lots of years shuffling paper from one point to another. That's all going to end. We're going to be free. The shackles of paperwork will be gone. So I'm enormously excited, and I think not only can we be more innovative, and I know the government are thinking about these things, but could obviously always go further on how to harness crypto rather than be afraid of it. but also to bring in sort of investment in testing for other concepts, whatever that might be, if it's life sciences or biosciences or whatever, so that we become the capital, as I say, of regulation. So we export our regulatory agenda and thus actually dominate the world and make us the must-go-to place rather than just a choice.
I'll just add one small and rather obvious point. I think there's a reasonable political consensus around this, that we have a tax regime that penalizes equity risk capital at the expense of interest and borrowing. And we talked endlessly in my government about how we were going to correct this balance and stop giving such generous interest relief and rather supporting risk investment. And it's proved extremely difficult in practice to do it, or else governments have taken their eye off the ball. But that's a fundamental issue within the tax system we've never really addressed, the effective subsidization of interest relative to equity.
Thank you. Maybe one more question. Lady just there, blue shirt.
Thank you. I'm Laura Barker, and the title of this is actually Why Choose Britain? So purely, the centre of this must be talent. How do we develop anything if we don't have the very best talent? So then if we look to the latest statistics in August 2022, we look to housing price growth, 14.3%. We look to wage growth, 6%. Our wages are not growing as much as our housing prices are growing. How do we actually encourage those younger people, middle-class people, to get onto the housing ladder, give them better wages so that they can actually be encouraged and incentivised to help drive the technological advances that we're going to need? Surely we have to look to wages. Do you agree?
And that's not going to be the answer in the next couple of minutes. So what I'm going to do is I'm going to wrap that question perhaps into final remarks from our panel, sort of talent growth and why choose Britain, and how we do get ready for the next stage of innovation. Chris, can I start with you?
Well, look, I mean, I talked about talent earlier in my remarks and addressed it because I think it's too often overlooked. You know, we talk about everything else, but we don't talk about the talent we need to drive the future of the economy. And that does mean not just educating our young people well, and which we do, but it means holding them here, it means keeping them here, it means engaging them here so that we don't get a brain drain, as we saw years ago, into the rest of the world. And that's about having a strong economy. We've got to be able to afford to pay those wages. We've got to be able to get people onto the housing ladder. I agree with you. The housing ladder today is almost unthinkable for most young people. They could never potentially afford to get onto it. So we've got to drive that aspirational culture that makes young people want to stay here and be part of our future.
Dominic.
Well, that's so well put. I mean, I think a culture of aspiration and success is vital. But I'd also look at the universities. You know, we've done everything we can to make the funding for universities as complex and as limited as possible by not being brave and owning up to the fact that A, we are going to have to pay, if you want to have a good university education, it's going to have to be paid for. And B, you should encourage universities to make as much money out of their inventiveness as possible and actually celebrate that and rejoice in it rather than see it as something that's sort of complicated and that has to be managed. But at the end of the day, I'm very optimistic because we do have all these natural attributes. We have the human capital already in this country that it's so desirable and is so exportable. So all we have to do is make sure we don't stand in the way of that. And that really is the mission of the Centre for Policy Studies and the core of Thatcherism, which is to release our inner instincts and capabilities to achieve what we can. If we can do that as a government, if we can reduce the friction and the hurdles that investment encounters, we will be able to really achieve anything we like. And I'll say one just last comment, which is that there was a question on the sheet which was never asked, which is which countries do you see are your main competitors? Well, everyone is our main competitor. And I heard extraordinary stories of the Spanish investment minister and the Indonesian investment minister sort of calling prospective investors at sort of 3 a.m. to try and get them when they were in bed so that they could then invest in the UK. But the real success is the fact that the French investment brand is called Choose France. It's in English, so I sort of think we've already won.
Well, maybe I should just take the cue about universities, which I think was a very good point. I carry the scars on my back from having introduced a rational system of pricing of university education. And as a result, universities are much stronger and our higher education sector is now solvent. It wasn't before. So that's a very good point. I can just ask one slightly sectarian point, that it causes enormous damage when the Home Secretary raises questions about why we need to admit overseas students, who are an enormous benefit to the university sector, the British economy, who are a symbol of having an open economy, which we're now supposed to be embracing. So that sounded to me a very sour note, and I would hope that my Conservative friends relay that back. And just a final point, which is, I think, an area where I probably am out of step with most of the people in the room, is that I personally wouldn't have any problem living in a country like Denmark, which is 30% richer than we are, and has a significantly higher level of public spending financed by fairly egalitarian taxation.
And final remarks to Andrew.
Well, you can read it here first. I'm definitely not going to Denmark. We're a wonderful country for all of the reasons we talked about today. Fundamentally, the question that the lady asked, we're only going to answer by growing our economy. I mean, fundamentally, it all comes down to, we can all spend a lot of time just playing at a sort of cake that's either pretty fixed or getting slightly smaller by the year in relative or absolute terms. Or we can look at our thousands of years of history about what's made us successful when we've been at our best. And one of those moments at our best was when, Mrs. Thatcher came in and she confounded pessimism, and she didn't just change economics and put up a little bit of tax and then cut a little bit of tax a great deal more, but actually reframed how people thought, lifted their eyes upon the horizon, saw that we're in a big and global world, but a big and global world where an awful lot of people covet what we do, whether it's our people, the way of working, even the way we regulate things. And so we need one of those moments. That's actually what's going to give us the resources to solve some of the big topics of our age. How do we get young generation on the housing ladder? How do we deal with intergenerational fairness? How do we provide long-term health care when, Dominic's daughter's going to live forever? Think about the financing of that. You're just lucky it's not school fees, Dominic. But the only way at the end of the day is to have a strong and productive economy that involves us building some sort of consensus so things don't chop and change all of the time, but it also involves making some sensible, wise choices, which is why you're so wise, Charlotte, to have assembled such a great group of people here today. Thank you.
Well, what an amazing panel. I think we've covered talent, regulation, tax, competitiveness, attractiveness, investment, and I think before we went on stage, I did hear the Minister talk a lot about action and the fact that action is what we need now, and it's time for action. So very much looking forward to working with you and with all the panelists. But please do thank the panelists for their great comments today.